let's get right into it, okay? And for someone, we don't know, there could be so many people, in so many different scenarios and circumstances. People are all over.
Yes.
Right? Different financial situations in their life, different situations, and we want to understand, for anyone that is listening right here, what does knowing your numbers actually mean? Let's get a little bit of an in-depth conversation about that.
So what it is having a full financial snapshot of 4 key areas. And this will sound familiar. It's nothing new, but it's just a reminder. It's your income, expenses, your debt, and your assets. And what it is actually knowing what those numbers are. Not guessing, actually knowing, writing it down, recording it on a spreadsheet, tracking it digitally. Why? Once you know what these numbers are, you know what your financial starting point is. And knowing where you are, whether it's good or bad, right, gives you at least confidence to say, hey, at least I know what my starting point is, where do I move from here? And from there, you can build structure and peace of mind, because now you know your starting point.
I love that. I love that you have structure. You said you have structure, confidence, and peace of mind. Now, what I love about what you're telling me here, Brother Anwar, is that you're saying, okay, in Tiaz, we have this 9-week journey. Okay? We're going to be going on a road trip now. We're going to be going towards the next destination. But before we do that, we need to know what it is that we have here.
Where we are right now. What's our starting point?
How much petrol do I have to take us on this road?
And how much
tires?
There we go.
Up? Do I have my CV joints in place? Is everything ready before we get started?
Correct. Where are we? What is our starting point? What is the address we're starting to? Because how can we ascertain our destination or even how to get there if we don't even know where you are right now?
Ask you your location.
Where you are right now. That's the first thing the GPS says. What is your current location? Absolutely. And then you put in your destination.
It doesn't matter where you download your GPS from. They want to know your destination.
Start off where you are.
Start off and then your destination.
And then we're going to set our destination. A lot of times people think of the destination first without them knowing where they are right now. I want to do this, but where are you right now? I want to save for that, but where am I right now? I want to pay that off, but where are you right now? I want to earn more. I want to do this, but where are you right now? So how can you say where you want to be when you don't even know where you are?
Ah, beautiful. Love that. And I like the parameters you've already provided for us. We're only talking about 4 things here.
Yes.
We need to know your income, your expense, your debt, and your assets.
That's it. That's all you need to know. Right?
So, it sounds so simple.
It sounds so simple. But let me tell you, let's take one example. So you say, Anwar, how do I get this? Well, you're going to have 4 things. You're going to have your payslip. You're going to have your bank statement, preferably 3 months bank statement. You're going to make a list of all the assets, all the things you owe. And you're going to get a list of all your debts. If you don't know how, you can pull a credit report. We can chat later about that. So we're going to look at what makes up my income. We're going to go through, and we'll go a bit more detail as to how we're going to see what exactly is my expenses. What are the things that I'm spending money on? Where is money leaking? Where is money disappearing to? What are my assets? Do I own actual assets? And what is an asset? Something that builds my net worth or my wealth. Do I have assets? Am I building up my assets? And very importantly, what are my liabilities? What do I owe? Because when you come to a later episode, we talk more about debt detox. There's certain type of liabilities that can build you and there's certain that can destroy you. So we need to know which ones are which as well. Right?
You know what's difficult about it? And I know we're not there. I don't want to get too excited about those conversations. Detoxing debt. What did you call it?
A debt detox.
Debt detox, right? What I love about that is that they go unnoticed.
Yes.
It's like a little pipe burst. You don't even know that it's leaking. But
until you see the water bill come from the council end of the month and you wonder, but I didn't use that much water.
Exactly. Water bill from the council, some molding place, cavities developing in your, like something.
And it all started with a small leak. So there's a saying, if I can quote Benjamin Franklin, one of the early presidents of the US, he said, small leaks can sink great ships. Small leaks can sink great ships. So, meaning you can have a high income, but if your money is filtering and disappearing somewhere, that high income can translate into no real wealth building because everything is going somewhere. But if you have a small income, but you plug your leaks, you see where money goes, that money can be redirected more purposefully. So you want to plug the leaks. Before you set sail, before you're going to journey, you also want to plug leaks. Once again, so you're going to go through your bank statement, you're going to look for those leaks and plug those leaks before you plan ahead.
Plug the leaks before you plan a. Whoa. We're getting way ahead of ourselves. Let's slow down here. We still checking our petrol. We haven't left Cape Town yet. Let's slow down there,
Yes.
Let's slow down. Okay. Awareness, bringing confidence, structure, and peace of mind. Now, firstly, let's open up the conversation. We're about 4 minutes. Let's just we have to go for our Maghrib Waqt, inshallah. Let's get into this very quickly. Why do so many South Africans struggle to keep track of their finance? Now, I mean, I remember looking at some statistics, and we're looking at like an over alarming, probably 60, 70. I'm pulling numbers out of my thumb, I know, but I recall hearing around over 70% are over indebted.
So the figure according to the National Credit Rate is 76% of households. 76%.
There you go.
Meaning that your
76%.
income doesn't cover all your expenses. Your living expenses, your obligations, it says 76% of households.
That's wild.
Right? If you look at individuals, 45% of credit holders, that's about 11 million people, are one or more payments behind on debt.
45%.
More than half, almost half.
Or one
or more payments behind.
35%
are 3 or more payments behind. Now, just to put it into perspective for the older members of the audience,
yes.
When we had the financial crisis, that figure was closer to 10%. When we had the 2008 financial crisis. So we are finding default rates that are basically getting close to what we had in 2008. If those old enough know what happened in 2008. The only difference is this time it's more consumer debt. That time it was property debt. So that was a property debt crisis. This is a consumer debt. And it's not South Africa. It's worldwide. And a part of the reason is that we end up spending without knowing what we're doing. We just consumerism. We're just consuming without actually seeing what are we actually spending.
Things available, Anwar.
So many.
And I have to get it all.
Exactly.
I have to buy it all.
So it's a classic.
I'm going to be out. What am I going to talk about for the next dinner? You know, me and my buddies, I'm going to be the only one out.
Exactly.
But anyway.
But maybe also the only one with some money in the bank account as well, if that's the case.
That'll be true, eh? But nobody else will know.
Well, that's the thing. You can.
So okay, look, Anwar, no better time to have this conversation.
Yes.
Okay, so we have this conversation about South Africans that are generally struggling. I like that figure that you're given. 77% you are looking at over indebted. 45% we're considering to be one or more payments behind. I mean, those numbers are staggering. So why do so many South Africans struggle to keep track of their finances?
So think about it. If you're having leaks happening, let me give you some example. Fear.
Yeah.
They don't want to look at their bank account. Why? Because you don't want to see what's happening.
That's true.
Right? Because
I felt that one or more times.
I've sat in rooms where I've given workshops and talks for, let's call it 20, 30, 40 people. And they ask how many actually looked at your bank account in the last month.
Yeah.
You want to guess what's the average?
No. You're not going to
If it's 2, it's a lot.
Out of how many people?
20, 30, 40?
No. 2 people.
Actually look at your bank statement. Go through it line by line. Once a month.
Really?
And this is all different workplaces, different categories, different income levels, different demographics. Similar thing. Now think about this. You work 40 hours a week, plus traveling, add 50 hours, plus everything else, say 200 hours a month. You spend working, earning money. But most people spend less than 1 hour actually planning how they're going to spend it. So 200 hours of blood, sweat, and tears, not to earn it, to work it, to bleed for it, less than 1 hour to actually plan how you're actually going to spend all that hard-earned money.
And what I'm not a mathematician, but those numbers seem very out to me. More number talk when we get back, inshallah. After the Maghrib Waqt, inshallah, we'll go away, we'll come back, talk more about your numbers. Let's find out. Money Matters, Voice the Cape, 91.3 FM stereo. We are here with financial educator Anwar Barendse, and we are talking all about awareness, knowing your numbers. Before the Maghrib Waqt, we spoke a little bit about why so many South Africans are struggling to keep track of their finances. Also had a conversation about what does knowing your numbers actually mean. It's about confidence, it's about structure, it's about peace of mind, income, expenses, debts and assets. Did you know that about 200 hours of your month, right, is what it takes for you to earn your money, and you spend less than an hour planning or reviewing it? Anwar, that is staggering. Still reading it once or what? Still going over it again, It just shocks me. Absolutely.
And like I said, that is from my own sample size, we have probably spoken to a few hundreds people over the last year or so, giving workshops, talks, etc. And that is my experience. It is an uncommon thing, whether it's clients, whether it's workshops, whether it's just speaking to people in general.
Yeah.
Right? Yes, you do check the odd balance, but who actually goes and say, "Oh, I spend so much on that, I spend so much on that. Oh, I didn't know I spend so much on groceries." A lot of people, I promise you now, ask most people how much spend on food and groceries today. I will say 99% won't be able to give you an accurate answer.
They won't know.
No.
Is that why so often it's such a common thing to say, yo, I mean, I just got paid last week.
Yes.
We did this 2,000 rand go.
And-
We did this 3,000 rand go.
And the thing is, you think you spend 3,000 one go. It's not. It's a 50 rand here. It's a 20 rand there. It's 100 rand there. It's a, oh, I forgot to pack in lunch. You just get a quick KFC, whatever it is, 100 rand here, there, everywhere. And then what it adds up over a period of 30 days, think about it, adds up. 100 rand a day over 30 days. That's 3,000 rand. 100 rand. So just because maybe you didn't take lunch to work and now you say, oh, let's go get whatever, 70, 80 rand in a couple. It's 100 rand. It's easy to spend 100 rand in
Lunchtime.
a day, lunchtime, if not more.
That's done.
That's still, and then what about the weekends when you want to have an extra treat? That's going to cost more than 100 rand.
Yeah, let me spoil myself.
Did you spoil yourself?
Yeah, as if I've been eating, chowing on things all week. You know what I mean? That's minusing your, excluding your coffees every morning, excluding your petrol that you're going to fuel up now, excluding your buddies with, okay, I'm going to get him a bite as well. And, well, I mean, there you have it.
Yeah. Well, let me quickly run to the shop. Oh, I forgot this. Let me get here quickly. All that extra.
All of that extra. So 0829913 that's our WhatsApp line. Please do let us know what it is that you are thinking around. Are you working? I mean, obviously, one, you're talking about commuting, you're talking about hours at work. That's how you came up with your 200 hours.
Yes,
right? A month. So, how long does it take for you to earn your salary? Number one. And number two, how much time are you spending reviewing it and planning it? Those are the questions. Now, Ridwan, we spoke
Anwar.
about the Anwar, I don't know why Ridwan is on top of the tongue. But Anwar, I just want to know very quickly, practical steps. Okay, we spoke about the problems. We spoke about what the issues are.
Yeah.
Let's talk a little bit about the practical steps that listeners can take this week to start becoming more financially aware.
Yes. So, firstly, it's not about naming and shaming yourself. It's not about guilt. It's about just establishing a starting point, right? So, the first thing I want you to do is I want you first to clear your mind and don't judge yourself, because that's what people do.
Yeah.
They judge themselves. I feel guilty. I feel this way. I shouldn't spend money on that, etc. Right?
Yeah.
We're going to start without that slate. We're simply going to look at the numbers, cold hard facts. So what's the numbers? Your income, right? So you're going to go through your pay slip. You're going to look at what other side hustles you have. Maybe you do this, that, or other. You get that little income. You're going to add it all up, right? So you need to know what's coming into your bank account on a regular basis. Over and above that, I advise people to look at their pay slip, see what is coming. There can be leakages there as well. Maybe there's some debit order or some policy or something that you don't even know about that's coming off there that you can clean up. So there can be leakages before it even comes into your bank account.
So that you can save that amount now. That becomes income now.
Correct.
You're not spending it now.
Correct. So check that. Okay, now you know what's coming into your bank account. Now the second part is what's going out of your bank account. So there's a specific way you're going to do this. So the best way is to use a 3 months bank statement. You can do one, but 3 month. Why? Because you get different types of expenses. So what you're going to do is you're going to categorize expenses into 3 categories, firstly, or 3 categories, and then in that is types, if you want to call it. So first is what you call fixed expenses. Those expenses are the same every single month, right? So normally come off as a debit order. Think your insurance or a car payment or an online subscription. That is fixed every month. It's not going to change month to month. Then you have your variable expenses. Think your groceries, your food, your electricity, your eating out, etc. That's going to vary month to month. So you want to say over a 3 month period, what is your average, right? Next, you have what's called, or the last is what you call irregular expenses. These are the things that come up now and again. It's not part of your fixed monthly expense, not part of your variable monthly expenses like your groceries, your petrol, but it pops up here and again, right? That's your irregular expenses. Now, furthermore, you have fixed, variable, irregular. Now I can also categorize into which of those are wants or are needs or essentials. You must have these, and which ones are wants. It's nice to have. So once again, fixed. So the most important is your fixed and your needs, because that you can't change. Then you get your fixed, that are your wants. Then we can change it, but the only we can change either we cut them out or we keep them, right? Now your variables again, that is where we have room to play. Because we don't necessarily have to cut out our food while grocery, but we can reduce it. We don't have to cut out electricity, but we can reduce it. So often you have more room to play in your variable, whereas your fix is more rigid. If you're going to have to cut something, you're going to have to cut something out completely. So you want to look at your variable, right? And you want to look at if there's no unnecessary fixed expenses.
Gotcha.
That little thing, that debit order of 50 Rand for you don't know what's coming up, but it's still coming up every month. We all have that, right?
Yeah.
Then you have your leakages, right? So what's your leakages? Your leakages are those things that it's neither a want, it's neither a need, it is just money disappearing into nowhere. You don't even know where it went. Right? And of course, what you would want to also ideally is you want to then see if there's a surplus or a deficit. In other words, is what is coming in covers everything going out or not.
Oh my. Are we ready for that though? Like if you think about it mentally, I mean, I like how you started, obviously. You said, guys, listen here, detach from all the emotion. Let's just look at the facts.
Yes.
Let's factualize the whole thing. I mean, and that is where financial planning comes into place, because here you are saying, listen here, it's hard, maybe it's not that easy to do on your own, right? So, I mean, you've obviously put yourself in several spaces and circles like that, with people requiring that conversation.
Yes, so
what is that like? I mean, that realization. You have a client and they're going through this and like, oh my word.
And it's funny because you get different types of clients, right? You get those that are saying, Anwar, I know something's wrong, but I don't know what. And those that just can't understand where they are. They'll say, hang on, breathe, stop. Let's just see what the numbers say. And many times I would say 99% of the times, whether it's coaching clients or clients in the outlet, because not everyone is over indebted. There are people that do have a bit of a surplus, but they're not getting the most out of their money. Right? So there's coaching for those clients as well. So you don't have to be drowning. You can also, you know what, I'm just not getting ahead. I'm not going backward, not in it. So there are those also. So what is it? You want to look at where your money is going, and you want to create a realization that, you know what, if you see something, don't say, oh, I was stupid. Don't say, oh, I shouldn't have done that. What happened. You want to learn from that.
Yeah, that's
right?
The off-putting part.
That's the off-putting. Oh, I was so stupid. I shouldn't have done that. Why did I take out that loan? Why did I spend that on a credit card? What happened. Let's put it on paper and see where we are now and learn from that, right?
Correct.
And often find is not because of that fear of, oh, I'm going to feel guilty. I'm going to feel bad. You know, the old ostrich in it. You end up not looking at what happens. It just gets worse because you're not establishing what your point is. So now we go back to the ship. You're now like a ship is in the middle of the ocean, just floating about. No GPS. You don't know where you are. So how can you now sail to your destination if you don't know where you are? Just in the middle of the ocean, nowhere. And like I said, it can be scary, especially if you know the picture's not going to look that great. But guess what? How do you fix it without actually looking at it?
A little bit of courage here, and I think that's probably one of the major roles that you're playing here, you know? You're the one that's in the corner, you know, backing them up, giving them the push and the go in.
And I think that's the important thing is that it must understood is that it's more about support and growth than blaming, oh, I should have done that. I can do it to myself. I can say I'm stupid 20 years ago. I should have put away more money so that now I can retire. But I wanted to enjoy it. I wanted to do this. That's normal, right? Understand also some of the stuff I speak about is not only from my observations, also from my own behavior, right? I'm less than 1 year away from 50. So I've lived long enough to make mistakes and learn from them, right?
Wow.
So
you interview now,
yeah.
Is that what just happened now?
I suppose so, yes.
Wow.
So a lot of it, and also it's the thing is, why it's human nature.
Yeah.
If you speak to the majority of the people, I firmly can identify what I'm speaking, more people than less, myself included.
Yeah.
Right? So it's not something to say you people out there, it includes us in here as well. Right? Even myself, I had to take a hard look and say, hang on, let me look and see what, and you're not, I know why, okay, that ends. That ends. Like, For example,
Yeah, what a process.
I realized last year for the first time in 20 years of working, I had my car paid for the first time and I didn't trade in to get a new car. Because I thought, no man, why am I doing this every 5 years? Just the cars, but now I trade and deposit and then get a new car upgrade. So I thought, no, just why am I doing that? Right? So it also takes your own self and I think, oh, yeah, it's not that bad. You don't have to buy a car every 5 years, especially if you're having it finance, etc. Why are you creating this? And
was there balloons on there?
no. So that is something that's
story, eh?
no, that's something you stay away from completely. So that I think what it does.
We'll take an extra 1-2K off your installment.
Yes, but add a what? Another fat payment with interest on it.
Yeah.
And then what happens is you after 5 years your car is worth, let's say 150 200,000, but you still owe 250,000.
That's wild.
I've seen it many times.
That's wild. That's a very smart system, eh? If you think about it. Okay, this thing depreciates. Let's see what we can do to extract the most juice from it. Okay, let's sell it for 450. Let's have them finance and pay it back. I mean, they're going to pay us back another 800,000.
Exactly.
Balloon payment on
Yes.
the 30%. And when they're done paying the 800,000, it's still not theirs.
Yes.
7 years later.
But
they owe maybe 100K on the car afterwards. Okay, then they can't pay us 100K. Let's put them on another installment plan.
or let's give you a cashback on your trade-in and add it to finance onto your new car you're gonna buy
on the new products.
on the new products and add that and now continue the cycle.
Yeah, that's a game, eh? Anyways,
Yeah.
Brother Anwar, I mean, you talking like this about South Africans struggling. I mean, I spoke to a friend over the weekend, and he did not even know. He was already paid up on his vehicle, and he still paid the installment.
Exactly.
He never knew that the installments were done, and he made a full installment on the vehicle.
Well, let me give it the reverse. I had a client that thought the car was done, paid. And then somebody came knocking on the door, and then she found out she had no idea. She found out she had something called the balloon payment, and that was the very first time she even knew what the balloon payment was, never alone that she had it on the finance.
Yeah.
Because what happens, you go to the car, how much can you afford? Oh, no, 4,000. A car that must be 6,000, they magically bring down to 4,000. Oh, I can now afford it.
Why, fully.
I can explain, but we're going to get...
I'm saying you as the client.
Yes, no, you don't know. All you know is, oh, you can't afford 6. Can you afford 4? Yes, off you go. You don't know they did all that financial engineering in the background that makes you end up spending much more in interest or over longer term. Now they even have 96 months vehicle finance.
No.
Wait, listen to this. So I heard
96 months?
96 months.
I've never heard of that before.
And in the US...
How many years is that?
8 years. And in the US, they are now looking, the president wants to have 50-year mortgage loans. 50-year mortgage loans. Meaning if you buy a house at the age of 25, you pay it off until the age of 75. And who buys a house at 25? So you buy at 30, you're going to pay it off until the age of 80.
Years.
To make it more affordable.
Okay.
Okay.
So we need to plan. We need to get
We
our
need to
things
plan
in
it.
place.
So now you see, knowing these things is important.
Absolutely.
And the question, but Anwar, what if I'm in that situation? No, that we just want to find out where you are now. We're still going to create the plan. So don't worry about what we're going to do about this. Let's first find out where you are. What we're going to do is going to follow once we find out where you are.
Diagnose first.
Yes.
And that is the main aim
Now,
of the game. So yes, you were explaining. So
yes.
what just like as far as our income.
I mean, we spoke about the debt. So yes, knowing the balances on what you owe, right? Knowing the type of debt you have. Is it secured debt? Is it debt for property or vehicles? Is it unsecured debt? Credit cards, store accounts, etc. Because there's differences between the two.
Yes.
What your interest rate is on there as well.
Yeah.
I'm not going to get into the subject of Sharia versus non-Sharia fund. We can do that or nothing, but we're just going to speak in general now, right? Then, of course, not all is bad. You also have assets. So sometimes, yes, you can have some debt, but if it's backed up by a valuable asset, maybe have a bond, but the property has grown by value, not necessarily a bad thing from a financial perspective, right?
Okay.
So you want to see, now when you speak about assets, you talk about assets with value. So you get two types of assets, what you call lifestyle assets. So those are like your vehicle, the house that you live in, etc. So they're worth something, but they're not maybe something that you can build investment from, necessarily investment value. Then you get what you call investment assets. Those would be like your various investments, unit trust, property investments, shares in company, etc. So you want to have a look at those type of assets as well.
Okay.
And a lot of time people say, but Anwar, how do I know who do I owe and how much do I owe to get the statement in one? Well, you can do a credit report. It's an easy way to get an idea of what it is. Also, we offer on our website, if you go www, you must add the www.thefinancialeducator.co.za, you can actually request your free credit report with our comments and suggestions within 24 hours to guide. Yes. So we can say, hang on.
Credit report with the comments.
With our comments, we will say this is your utilization, this is what your score means, etc. These are all the good points, and if there are any things we need to highlight, these are highlight points, and just to know where you are. So at least, okay, that's where I'm standing with my credit report. Now I've got my assets and liabilities.
Yeah.
Now I've got my income, and now I've got my, after much deliberation and tears, and I've got my list of expenses from the 3 months bank statements.
Okay.
Now you got your numbers, right?
Wow. I mean, that was quite a process.
It is.
And wow, anybody that's willing to sit down and to go through each of them, those points on their own, I mean, that's definitely someone that says, listen, I'm here and I'm serious, I mean business. Let's quickly go for some ads. When we come back, we're going to open up a new part of the conversation of knowing your numbers. We're going to be asking questions around downloadable resources, about the website. Oh, as you mentioned, that you are able to actually get the credit report from the inshallah ta'ala. Okay, let's go back quickly. Let's go and we'll come back.
Financial Educator, we believe your finances should work for you. Whether it's getting out of debt, building a budget that breathes, or planning for the life you really want, our expert coaches guide you every step of the way. One-on-one support, digital courses you can follow at your pace, debt counseling you can trust. Don't wait. Take charge today. Visit thefinancialeducator.co.za. Tailor-made financial clarity is closer than you think. The Financial Educator, your partner in smart money decisions. Because when you understand your money, you own your future.
And let's start owning and taking control of that future. We do have a say, and there is something we can do about our current financial state.
Yes, indeed.
So
yes, we first want to know where we are. We're gonna
first have to know where we are, and that is exactly what we are here and setting out to do today. So now, I mean, look, we spoke about a lot of different things. I need to get an idea of, there's something that I saw here, and it's something regarding a personality, okay? Now, we want to become financially aware, but we also want to know, is there a certain trait or something inside, is there a personality to the money that I spend?
Yes. So what we need to know is that our personality drives our behaviors in various aspects of our lives, including how we handle money, right? So our upbringing, our exposure, all those influences translate into what we call our own money autobiography. What was the message you grew up, right? Along with some internal factors even. Some people are even wired certain ways to behave in certain ways. So what I discovered, and you will see this some places, but I discovered that there are essentially 6 different types of money personalities, right? And I'll list them quickly and give an explanation. There's the saver, the spender, the avoider, the planner, the risk taker, also known as sometimes the gambler or the cowboy,
Okay.
and the giver. Right? So what are they? The saver, they love security, right? And they want to plan ahead. Everything must be planned and everything must be, I'd rather have money in my pocket than spend it on something I don't need. The spender is what, I only live once. YOLO. If I die, somebody else is going to have my money. So they see money as a form of enjoyment, spending money. I work hard for that, right? And so they naturally spend money for various reasons, right?
Okay.
Then we have the avoider. That's a person that don't speak about money. I don't want to look. I know it's off limits. It's a taboo.
You don't know anything.
You don't want to know anything also, right? The avoider, it's maybe there's an house where money wasn't spoke about, money was argued about, so you just want to avoid any conversation with money.
Wow.
Then there's the planner. Organized, Excel spreadsheet, goal-driven, all that, but can be a little bit inflexible, right? Then we have the risk taker, somewhat similar to the spender, but more opportunity-focused and bold, but so they can take risks, but also they should plan for safety. Then last is the giver. Generous, always giving, but they need to protect their own stability, because often I find, if I look at who are the ones that tend to get into a bit of trouble, it's your spender, obviously because of spending habits, your risk taker, sometimes they take on unnecessary risk and it causes problems. And the giver, why? They cannot say no. Can you help us out? Okay, yeah. Can you help us? And it's amazing. And often you will find where the givers are a lot of times in the community, females, because so many females work these days. I mean, I think more than 55% of graduates are females, so more females and professionals in the workforce find it very hard to say no if that person asks him for money, or if that relative asks him, or this or that, right? A lot of times, givers. So you get into trouble not because of spending on yourself, but because of helping other people out.
Yeah.
So why do we need to understand this? It's not to say, oh, that's right or wrong. If you understand what drives your spending behavior, you can then put the necessary, let's call it guidelines in place. So if you're a saver, maybe enjoy your money a bit. If you're a spender, you can spend money, but set guardrails, set limits. Avoid, start by looking at one thing a month. Just understand how the one thing works. The planner, allow for some flexibility, right? So that is what you want to do. The giver, very simply, learn to say no. Right? So once you understand it, you don't want to fight against it, you want to work with it. Now, where do we see a lot of conflicts, especially in couples and marriages? Savers, and the one is a saver, the one is a spender.
Yo, that's like a directly at it, no?
Directly.
Without even knowing, listen here, hang on, there's a personality clash, let's figure this out.
And the money, so if you look at conflict in relationships, more than half divorces are because of financial conflict.
Wow.
And what drives a financial conflict? You have two different personalities, two different upbringings, two different viewpoints on how money must be used, and those become at loggerheads. Right? So but hang on, you actually a saver. So let's work with your saver. Let me understand, let you enjoy life. Anwar, you a spender, you're not Anwar. Okay, put away, there's your fun money, but other than that, do that. Now you start to work, learn to work together.
And what I love about that, Brother Anwar, is that is all about awareness.
Yes.
If I am more aware about my numbers, about my money personality, I then become more understanding.
Exactly.
As far as where you are coming from. Because I know myself, right? Now I start to learn about you.
Correct.
Your money habits, your ways, your personality. And if I have that level of understanding, there is a conversation of compromisation.
Correct.
There's a conversation of, okay, there's gonna be the clash. But this is how we start to resolve
it. Correct. So what we need is somebody else, but Anwar, how do I know my money personality? So if they do go on our website, it is www.thefinancialeducator. There's what they call free tools and resources under free stuff. We have everything. We got your checklist. We got your money personality quiz. So take your quiz and see what is your money personality. Have your spouse take the quiz. See what is their money personality. We also have something called the financial fitness quiz. Remember we said you can't manage what you measure. It's a quiz that answers you questions in various categories, from saving habits to debt to investments to your various, and actually tells you this is your level of financial fitness. So you can actually give yourself a score and say, okay, this is my starting score. Let's see how I can improve the score. So they can go onto a website, www.thefinancialeducator.co.za. Get these resources. There are budget spreadsheets they can download, all these tools. Everything I'm speaking about, the resources are there for free, available to anyone.
Yeah, that's incredible, Anwar.
Yeah.
Absolutely incredible. I mean, we would be doing ourselves a disservice. I mean, like you said, there's not even a little thing, a link there, okay, to get to your result, or to get the report, EFT, right? Because usually you would pay for these things.
Yes.
But like you're saying, there's a free tab, use there and introduce yourself into the practical side of what we're talking about.
Yes, because what we believe is financial education shouldn't be sitting behind a paywall, right? Because think about it, who often needs it most? The people who can least afford it. Mm-hmm. So that is why we make these tools available. We give the clients the tools or people to have the tools to at least do a bit of their own self-assessment, the self-awareness, etc., right? Mm-hmm. And if they want to discuss this, we can have a conversation about it, but I also wanted to bring it to anyone, because maybe someone just want to sit and do it in their lounge on their own and figure their own out while listening to the show.
Brother Anwar, around the money personality, okay, will that actually help you manage your money better, knowing your personality?
I'll give you an example, and I'll use myself as an example. So myself, I was a bit of a spender, but I didn't know what triggered it. Looked at all sorts of things. I then discovered thanks to that, I may have a little bit of an ADHD brain. And then I looked deep and I discovered that if you have ADHD type symptoms or neurodiversity, you actually can be wired to spend because you're impulsive. So that impulsivity that comes from that actually translates into impulsive spending for that dopamine hit. Because what do ADHD people want? They always want something new, always something novel. And one way of getting something novel is of buying something. So you buy something, you get the dopamine hit, it satisfies that impulse in you, and 2 days later you don't just need that thing. So once I identify that, I discover when I want to buy something, that's not me needing it, that is my dopamine hit craving for something. And I say, hang on, just park, do I need it? 2 days later, I don't remember what it is I wanted. And by identifying that one trait, I was able to cut down my impulses just like that. Because I knew that was my wiring making me want to act like this. So I just said, hang on, just pause a minute, don't act on that impulse. Wait, and that's how I just basically, by being aware of it.
Wow. Anwar, I love your story. Thank you so much for sharing. And I'm looking at my time now. We're already on the clock, Brother Anwar. We still had a few things I wanted to go through. Maybe a quick check-in next week when we start once again, inshallah ta'ala. Key take-home. 30-second take-home. Do we have something there, Brother Anwar?
Yes, key take-home. Right, so what it is simple. Write it down. Categorize where you spend it in real time. Because you're going to see quickly when you start spending that thing for 50 rand, you think, oh, wait, I must write down 50 rand in my book. Do I write down at 50? Okay, maybe I must stop, right? Categorize. Where is the money actually going? Is it going to food? Is it going to transport? Is it going that? Review it and see where these leaks are happening and start plugging in those leaks. Because once we set our goals and we set our ship sailing, we want those leaks plugged. So that's our mission for the next week. Do that. Start identifying leads, start plugging the leaks, start knowing your numbers, do your money personality quiz, do the financial fitness quiz, set your starting quiz. Next week, we're going to look at setting goals and how we set goals, what we call SMART goals. Specific, measurable, achievable, relevant, and time-bound.
Fantastic stuff. Brother Anwar, thank you so much. Absolutely amazing, the Financial Educator. On the Voice of the Cape 91.3 FM studio, and we do hope that before you join us next week, make sure that you've completed the personality assessment. Make sure you've gone through to the website and downloaded your budget and expenses reports, etc. All right. So otherwise, Brother Anwar, other than that, thank you so much. Once again, absolutely amazing conversation, and thank you for really putting in so much research and enthusiasm, in the presentation. Absolutely amazing.
Yeah, shukran. And it's glad, I'm happy I can share it with the viewers. It is a passion of me, helping people just work better with their money. And sometimes I find it's just a little bit of guidance. So if I can do it here to as many listeners as possible, all the better.
Fantastic. Thank you so much. And I'll hope to see you next week, inshallah.
Inshallah.
As fresh as you are today. Inshallah. Money matters. We are concluding on the financial fitness part of the conversation, inshallah. After the ad break, we're talking about managing with investments. Bi-idhnillahi ta'ala.